on, DJ? I'm waiting on a beat to drop. Okay. That's a financial literacy beat. That's not a hip-hop beat. Ha! Good afternoon, good morning, whatever time it is where you are. Welcome to Urban One's Paving the Way Forward series. Black Men Reveal. We're back again, just trying to educate our people on ways, particularly today, that we can maintain wealth. If you go out of your way to buy a home and you start establishing equity in a home, the last thing we want to see is you lose that home from foreclosure. And we are blessed to be in this situation today. My name is Keith Battle. I'm an author and founder and senior pastor of Zion Church. And I am here today to lead this discussion and facilitate this conversation around mortgage, payments, home insecurity. And the question I want to start with today is credit card or other debt making it difficult for you to pay your rent or your mortgage? We know that home insecurity is often the unintended consequence of an inability to pay mounting credit card debt, student loans, medical debt. But by working with a nonprofit credit counselor, you can avoid or reduce the risk of eviction or foreclosure while tackling debt for good. And for more information, I'm going to tell you right up front how you can reach out for help about how nonprofit credit counseling can help you. Please visit nfcc.org/home sweet home. Again, that's nfcc.org/home sweet home. And this program today is made possible in part by the Wells Fargo Foundation. Let me start by introducing our panelists today to you. To my right on your screen, to my left, to your right. Mr. Rulon K. Washington is Vice President of the East Region of Wells Fargo Mortgage Sustainability Lead. Next up is Mr. Michael Leon, who's Vice President of Operations of In Charge Debt Solutions. And then we have a familiar face in our community, Mr. Hermond Palmer. He's Vice President of Outreach and Inclusion at the National Foundation for Credit Counseling. Gentlemen, welcome. Thanks for being with us today.
Thank you for having us.
That's right. We're going to help some people today. Mike, I want to start with you, if I may. What are you hearing from the community as it relates to the number of foreclosures and evictions right now?
All right. Thank you, Pastor Battle. Again, my name is Mike Leon, In Charge Debt Solutions. We've been providing financial counseling services for over 25 years nationally. And what we're seeing is that foreclosures and evictions are definitely up, especially compared to last year and even in some cases, pre-pandemic levels. For an example, just in September, foreclosures were up about to almost 40,000 foreclosures, which is about 18% year over year from the prior year. And that's foreclosures. And if you take a look at evictions are up significantly compared to pre-pandemic levels. And in some cities, they're seeing a 50% increase in foreclosures. And there's many reasons why, but of course, inflation has a lot to do with it. Inflation has caused the cost of everything to go up. So that means higher mortgage payments, higher rental costs. We're seeing consumers call in, and when their lease expires and it's time to renew, some landlords have increased their rent by up to 50%. So consumers are definitely struggling right now.
Wow, so these numbers are on the rise for sure.
Yes.
Absolutely.
Yeah. Rulon, let me go to you. What are some of the common mistakes homeowners and renters make when they find themselves at the risk of foreclosure or evictions?
Yeah, that's a great question, Pastor Battle. I mean, I've been with Wells Fargo for 17 years, and the majority of my time has been spent in the mortgage space. And man, I had a front seat to the mortgage crisis back in 2008, and also the COVID-19 pandemic. So This question is very timely and relevant. The biggest mistake homeowners make is they assume that if they don't address the problem, it'll just go away. So avoiding the problem only creates more obstacles as the mortgage continues to fall behind. So once you start getting behind on your mortgage, it's not your time to hide your head in the sand. We want to make sure that, as a bank, that we're engaging. The bank is going to call you. They're going to send you mortgage statements. The problem doesn't just go away. You have to step up and find that assistance, that support, whether it's through organizations like In Charge or calling your mortgage company directly. Another mistake that is very prevalent is families assume assistance comes at a cost. It's free to get help on your mortgage. It's free to work with your mortgage company. There's not a cost associated with it. It's also free to work with HUD certified housing counseling organizations. So, engaging with your community partners, engaging with your mortgage company early and often, it only benefits you when there's a financial hardship. Please believe if your mortgage payment is late, that mortgage company doesn't hesitate to call you. So calling and engaging early and often is extremely important.
I have a follow-up question I want to ask you, but I got to go to Hermond just briefly because he has a statement that I love hearing. What happens to people, Hermond, when you put your head in the sand?
When you put your head in the sand, that leaves that hiney up for all to see, and life has a tendency to come and kick it.
I love it. I love it. So well said. So well. So Rulon, a part two to this question. So what are some of the questions mortgage holders can expect when they contact their mortgage lenders? So if they're going to reach out to discuss their situation, what should they expect to be prepared to hear by way of questions from the lenders or the service providers?
Yeah. So the first set of questions that occur when you call your mortgage company is verification, right? They need to make sure that they are able to identify who you are. And I know for me, I have a tendency to throw away my mortgage statements. And I ran into a snafu a few years ago when I was getting some assistance on my mortgage and I couldn't remember my loan number. Here I am working for the bank 15, 16 years, and I don't remember my loan number, right? So that just creates more frustration. You might have to call back. It's a hassle, right? So having your information ready, because the mortgage company needs to verify everything to make sure that they're speaking to the right person and make sure they can start going down that path. So don't throw away your mortgage statements. You need your loan number. If you have online banking, make sure you remember your login. So the first step that a bank is going to take is making sure they can verify who you are. But ultimately, the most critical question that a homeowner will be asked is, what's your hardship? How did you get behind on your mortgage? It's interesting for me to say this, but I'll make this comment. Be honest and be truthful. Many families feel like they need to hold back on their circumstances, but that doesn't always get you the best results. Your mortgage company needs to understand your financial situation, your current financial situation, so that way they can help you. If you don't want to divulge information around what you're going through, it's really critical for us to understand how we can support it, right? If there's a long-term scenario where there may be a death in the family, maybe a loss of income, we need to make sure that we can support you and help you as a customer. But not being truthful or upfront about your circumstances makes it very complicated because now time has passed by and unfortunately the options start to shrink as time moves forward. So I think that's critical. Understanding what your hardship is and being able to share that information with your mortgage company is essential in getting the help you need.
Yeah, that's very important. There's an old saying: we can't fix what we're unwilling to face.
That's right.
I think our natural inclinations is to hide and to run, and we think hiding is buying us time, right? Let me get my money right. Let me stack some money. Hopefully, I can avoid it. We don't have landlines anymore, so they can't call us. We don't have to answer the phone and all of those things. But what you all are saying is so important. We have to be proactive and state the situation. And often, I know this is not, I want to move on to the next question and talk to you, Hermond, about y'all's work. But a part of what I want to say is just culturally, in that whole culture of this world, is there more grace than people are aware of that exists out there? Because I think there's a fear that if I reach out, I'm trapping myself. I'm going to be in more trouble. Just everybody. And that, before we go to Hermond, anybody want to address that?
Well, I can say a piece about that, Pastor Battle. I think you hit the nail on the head. I think there's a fear that if I say something too soon, I won't be able to get help or I'll be penalized by engaging too early. There was a really big issue during the housing crisis of 2008 where families were waiting until they were 120 days late on their mortgage to engage their mortgage company because someone told them your mortgage company isn't going to help you until you're late. Well, that's not true. And those myths have been in our communities for a very long time, right?
Mm.
I mean, if you think about, when you're younger, I remember my mother avoiding the bill collector, right? And a part of that is culture. And another part of that is just lack of information. So how do we engage early and often and make sure that we can be upfront about our situation? Hey, I may not be able to make the mortgage payment next month. Mortgage companies, they look at that, they'll waive late fees, they'll look at your credit, they'll say, you know what, we'll do a waive this month, we can set a payment behind. So there's options, there's opportunities, but being upfront and being open can only make the situation better.
I love it. Thank you so much. Hermond, what is the National Foundation for Credit Counseling doing to support consumers who are at risk of foreclosure or eviction?
Okay. Let's see. First, we want to build awareness. We're busy trying to get the word out that help exists, that you don't have to suffer in silence, that there's no shame in asking for help. People do it every day. We're busy trying to tear down the barriers built on myths and misinformation. We're working to build connections with subject matter experts like Rulon, Washington, or Wells Fargo, all in an effort to get critical information out to the people who need it most at a time when they can act on it and actually benefit from that action. We're building business cases and business models that justify the infusion of investment. When I say investment, I'm talking about investment of capital, resources, and people in communities that can benefit from having access to what these corporations and government agencies have to offer. Our member agencies are busy counseling consumers in a kind and supportive way that is non-judgmental. Counseling is not about judgment. We're about uplifting, helping to solve problems so that clients can feel supported, better educated, and empowered. And all that leads to more confidence. I have my health teacher when I was in 10th grade. We were doing human sexuality. And she said, I'm going to tell you what it is, where it is, what it can and cannot do. I'm still paying attention to that woman because she gave me information I could use for a lifetime. Same thing with a credit counselor, a certified nonprofit credit counselor. They're going to give you information that you can carry with you for a lifetime. So pay attention.
I like that. You're going to tell them where it is, what it is, and what it can and cannot do.
That's it.
I love it. Tell me, sometimes we get confused between service organizations. So can you make a distinction between what In Charge does and what NFCC is doing? What are the differences between your two organizations?
Absolutely. I'm glad you asked that question. Think of the NFCC as a trade organization that supports our accredited member agencies in the delivery of financial counseling services to consumers. We are the largest, longest-serving nonprofit financial counseling organization in the United States. The NFCC provides our member agency support for a range of program services, including housing counseling, dealing with pre-purchase, foreclosure and eviction prevention, student loan repayment, small business owner counseling, budget and credit counseling, and more. Our NFCC locator provides consumers across the country with a way of connecting with and receiving referrals to our nonprofit member agencies. And this process ensures that clients connect with an NFCC certified counselor. We also serve as an incubator of thought leadership for new engagement models, debt repayment products, and cutting edge research on consumer financial support interventions and behaviors. So that's what the NFCC does. Our member agencies, of which In Charge is one, they are the organizations that actually do the counseling. Our member agencies provide access to financial counseling services for all consumers. They are the ones who engage directly with clients and conduct the intake sessions. They work to understand client situations, provide recommendations and options. They create personalized action plans that align with the client's own goals and objectives. Think of it like this. If you're going through financial turmoil and you're looking for an eye in the storm, if you need a friend to help you catch your breath, you're looking for one of our certified member agencies. They are our boots on the ground that get the work done and put consumers on the path to achieving better financial outcomes.
I love it. I love it. To that point, Mike, let's talk a little bit about what you guys are doing. What are some of the benefits homeowners and renters receive when they have the opportunity to get this kind of counseling support from you guys at In Charge?
Well, one of the main objectives of a counselor at In Charge is to ensure that before the call ends, that the consumer is provided with knowledge, resources, and an action plan in order to improve their financial situation. Because a person's home, where they lay their head down every night, that's actually one of the most sacred places. And knowing that they may be at risk of losing that roof over their head is very stressful to the consumer. So one of the first things that we want to do is talk to them, get to know them, and help them to understand that we are an ear for them in order to actually help them with the situation. And many consumers find that to be a huge stress relief, because we're not only going to listen to them, we're going to help them provide them solutions. We may even be able to help them to find money they didn't know that they already had.
Yeah.
One of the first things that the counselors do is that they do a deep dive into their financial situation in order to find out what's the current status, what's going on, what's the root cause. And then they come up with an action plan. They look at their credit report with them, so that's involved with the action plan as well. And that action plan can vary depending on what the situation, but the action plan is to get them out of the financial situation they may be in, which is, possibly looking at foreclosure or even in an eviction. And we do that by working directly with either their lender or their landlord. So for an example, there are many programs out there that most consumers don't know that can help them to catch up and give them a fresh breath of air. For an example, loan modification assistance, sometimes forbearance. We may be able to look at their situation and maybe recommend refinancing their home. So those are just some of the many different solutions that are available to the consumer that unfortunately many times they don't know. So we'll talk to them about the pros and cons of all those solutions in order for them to be able to make an informed decision about whatever they decide to do. For an example, renters. We're also advocate for renters as well. And we may even work directly with their landlord in order to help them get caught up. There are many, there have been, especially with the pandemic, there was many rental assistance programs. When people called in, they found out that they were able to get from the government large sums of money in order to help them get caught up on the debts that before calling us, they were unaware of. Sometimes tenants, their landlords, maybe trying to evict them and they may not have any legal recourse to do, or maybe there's a legal process that has to be followed and the landlord may not be following that process. So we're also able to educate them to let them know, hey, this is the process where you actually have more time to stay in your home than you thought, in order to give them time to actually take advantage of the resources that are available to them so they can stay in their home. And so those are just some of the many different things that we can do for a consumer when they call in. But the key elements there is basically providing them knowledge and education, but then also being a resource, being an advocate to them, because we're going to help them through the process in order to help them stay in their home or find affordable housing.
And when you talk about these three things that you all provide, one being knowledge, one being resources, and the other being an action plan, let's just be clear, those resources is not necessarily financial support, correct?
That is correct. And so in many cases is those things that we mentioned, but we can, in some cases, help you find financial resources through different programs that may be available out there. And like I said, sometimes once we do that deep dive into finances, we might be able to help you find some money under the mattress too.
Yeah, I think this is great. Whenever you go to a doctor, I see it like this. You go to a doctor, you should get three things, right? You should get well, most of us don't go to the doctor until something's wrong, right? That's part of the problem. We're more episodic than we are preventative. So we have an episode, we're in so much pain, somebody makes us go to the doctor. Well, the doctor's supposed to give us a diagnosis, right? oh, I can tell you what's going on. Well, that's relief right there. I can tell you what's going wrong. But then here's a prognosis. Here's the good news, or here's where this could end up. And then I think any good doctor would give you some kind of wellness plan. Like you got to take this in the morning. You got to do this. You got to eat this. I want you to go to a neurologist. I want you to get an MRI. Like there's a walk away of takeaways that can get me back well again from the diagnosis, right? And I think that's what you're doing. You guys, here's your, because if all somebody does is say, hey, you in trouble. Well, I knew that. That's why I called you, right? That's the diagnosis. I knew that. I know we're in trouble. Well, and this is going to get worse, right? I know that. But where you guys add tremendous value is in this action plan. Like, hey, I can tell you where we can get some money within your resources, current resources, where we can free up some money for you to address this issue or build wealth or attack debt. Like, and here's some program. Like this is amazing. It works in my world too. I tell preachers this: if all you tell people when you preach is a diagnosis, this is what's wrong with you, and this is where you're going to end up, or this is how you don't have that's called application. What are my applications? What is my walk away? How can I walk out of this a better person? And that's the joy of what you guys provide. And I'm so grateful for each of you. Anybody want to jump in? I saw y'all leaning forward. I don't want to stop you from chiming in at any time on this. If not, I want to go to Rulon right here. Rulon, when people are struggling, should they contact their mortgage provider? And if so, at what point should they reach out?
Good question. You know, that's a simple question, right? The answer is yes, 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 and yes. Yes, contact your mortgage provider. Contacting your mortgage company is the very first step. There's so many things that can happen behind the scenes that a homeowner doesn't see inside of a mortgage business. And one of those things that happens is when you engage with your mortgage lender early, they begin to monitor your loan. They begin to look at your situation. They begin to flag your situation. You know, they will assign you a single point of contact, someone that will be a part of your situation, help you with documentation, help do intake, help with the process pieces. You know, they'll start to understand your situation a bit more. In some scenarios, a family will wait until they're extremely late, as I mentioned a bit earlier. And at times it becomes very difficult to help because foreclosures happen at different times in different counties and in different states. So just because you have a family member who went through some trouble paying their mortgage and they didn't pay it in a year, doesn't mean that it's going to be the same for the area that you live in. Some states are judicial, which means you need to go to court to go through foreclosure. Some are non-judicial, which means you have to kind of go through the timeline of the county that you live in. It makes it very difficult for you to gauge when the end is the end. So engaging sooner than later is always the best case scenario. That way you can signal to your mortgage company that you're having difficulty paying your mortgage. So the signaling for us is really important, right? So the first contact lets us know, it plants the seed to say, all right, this family is having trouble making their mortgage payment. Now we have to your point, diagnose. Where do we go from here? What do we need to understand your situation? So the first step is contacting your mortgage provider.
Great. Hey, I want to do a follow up with you, Rulon, on that. But there are some questions that are coming in from our audience that we want to address right now. And here's the question: anybody want to tackle this? Do any of you have financial education products that can be leveraged by nonprofits in the community providing services to youth and young adults of vulnerable populations? So they're not talking about their own individual financial needs, but can their organizations, do you have any financial education products that their organizations can use?
And that was geared towards young ones? Is that what I thought I heard?
Let me read it again. Do any of you have financial education products that can be leveraged by nonprofits in the community providing services to youth and young adults of vulnerable populations? So I think what they're saying is, can these tools and resources be bridged through their organizations directly to this population that they're serving?
So yes, In Charge actually does. We have a wealth of financial information online and can also be created for different markets as well. We take pride in going into local high schools. We work with Habitat for Humanities, and we provide financial education and services in order to help people be able to take charge of their financial situation. So a lot of that information and content involves how to create a budget, how to read a credit report. These are basic things that sometimes we take for granted that many consumers don't know how to do. So yes, so what I would say is that go to incharge.org or even NFCC.org as well, because many member organizations provide similar information as well that are geared towards educating different individuals.
Yeah, Mike, can I piggyback off that? So that's a great point. Another point I would make is that many of the banks that you see in your communities, they have a thing called the Community Reinvestment Act, where they have to provide services back into the community that they serve. And many of those banks have a financial literacy component. For an example, Wells Fargo has a financial literacy component called hands-on banking. Many other banks have similar items as well too, that are non-branded materials that can be shared through faith-based organizations, housing counseling organizations that provide insight on how to manage your budget, how to deal with financial literacy for use, for adults, for military, guidance around home ownership. We're actually revamping ours as well too, and it's been some legwork so far. They pulled me to the side to write some of the content of it, but yeah, banks have that, right? And it's a part of the Community Reinvestment Act, right? Making sure banks do their part to provide services and solutions to the communities that they serve. So if you're interested, you can Google, some of the larger banks that have presence in your community, and then look up any of their financial literacy pillars. And the majority of them do have content that is non-branded that can be shared.
I'm struggling to ask this question, but it keeps coming to my mind because, as a people, we're very scam sensitive, right? That's part of the paranoia around this whole thing. I don't trust anybody. And ain't nothing free in this world, blah, 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 right? And we've heard of professional athletes, for example, getting robbed of money from somebody who was supposed to be taking care of their investments, etc. So just, I know we talked a lot previously before we even went on air, and we didn't talk about this, but I just want to know, is there a scam sniffing process that you can educate us on? Like how do we know this is not somebody's uncle that's about to take our little 401k, and kill us? Like, are there any credentials that we need to ask for? Is there a number we can call? Can we get y'all cell phone number? Like what do we do when we're scared? Sometimes you just have discernment, right?
Right.
This seems like this guy, he don't seem trustworthy. But are there some practical things we can do to guard ourselves from being hoodwinked in this process?
I think we and others can chime in as well too. I think that we're starting on the right foot by having this dialogue. I think this goes a long way, right? You have a monster of an organization in NFCC, a great organization and in charge, and Wells Fargo. We're one of the largest mortgage servicers in the country. And so if you think about taking the time out to really explain the process, it's critical for folks to understand. And I did mention something earlier, right? This process doesn't cost a dime, right? When you're working with your mortgage company, there's not a bill that's going to come at the end other than your mortgage payment. And so the hesitation to work with your mortgage company first, because there's fear that it's going to cost you something, is going to buy you critical time. During the housing crisis, one of the biggest things that we noticed was scams, especially on elders. You would have someone that represents themselves as an attorney saying, if you give me $2,000, I can guarantee a mortgage modification. Little do you know, because you've never been through it before, you assume that the mortgage modification does cost something, but really just time and effort and engagement with your bank is all that it costs, right? Because you're already in a hardship. The goal for the mortgage company is to help you get back on track. That mortgage is a long-term relationship, 30 years sometimes, right? The majority of the loans are 30 years long, right? It's no benefit for the mortgage company to try to help you get out. It's more beneficial for the mortgage company to help you stay in. So if you think about that predatory aspect of it all, do your due diligence, understand what we're saying on our panel today, make sure you have the right resources, and you'll be able to have the right type of guidance, because scams are still out there. They're still prevalent. We've seen them rise during the COVID-19 pandemic. And that also brings some concern from a bank's perspective, because we want to make sure that we're engaging with our customers. But if there's an intermediary that is being negligent and they're not an NFCC, they're not an in charge, that cuts into the valuable time that's needed to really help them resolve their situation.
Well, I'd like to add also, be careful as it relates to scams. Be careful how the opportunity is presented to you, how it comes to you. There's certain things that legitimate organizations are just not going to do. If they come to you with an email with a lot of misspellings, you can let that one go. If they come to you with a phenomenal offer on the telephone, say, you know what, send it to me in writing. Or tell you what, who should I go to at my local branch to confirm this offer? And if all of a sudden up there you start getting well, no, it's not available there. Let them go, cut them loose. Just think about how the opportunity is presented to you. It doesn't make sense. And Mike, I know
to add to that as well, I agree with that. At the same time, you have to question any unsolicited help, really. And you have to ask, well, what's in it for them? Because there's not a lot of people running out there just saying, hey, I just want to go ahead and help people, unless they have a .org after after their extension, right? Nonprofit organizations, that's their mission. But if you have for-profit, you just got to ask that question. Okay, well, am I being taken advantage of, right? Because in many cases, we're seeing consumers come to us that are, and it could be with credit cards or dealing with credit cards. It could be offering solutions without determining if that's the best solution for the consumer. So, for an example, consumers have a right to file bankruptcy. There's solutions like debt settlement and so forth. And that fits, that's a good solution for a very small population, but then there's some that may be going around saying, oh, well, yeah, you should do this or you should do that, without explaining the pros and cons and the ramifications of that to your credit and your long time standing as well. And in many cases, there are solutions that are available to you that will benefit you immediately, but then also in the long run, much better than one of those other solutions. But when you talk to someone who's in the know, an NFCC organization or credit counseling organization, nonprofit as well, they'll be able to talk to you about the pros and cons of each of those solutions, and then advise you what's the best thing to do based on what your goals are individually. Because maybe you want to buy a home in 6 months, and filing bankruptcy, that definitely would not be something that'd be advantageous to you if you're trying to buy a home within 6 months. And that's just one of the examples. But again, be ready to ask questions, especially if it's unsolicited, looking to what's in it for them. And then again, take advantage of the resources that are available out there to you, the free resources that are available out there to you.
Excellent. Thank y'all so much for addressing that very important matter. And just want to, again, shout out both Wells Fargo and Urban One for bringing this to our community, because we need this kind of education. And I just want to say, as a community leader and servant, that because Mike, you said earlier, we got to do that deep dive, right? And then people, you want to get all up in my financial business. But going back to the medical exam, if you're having pain in your body and we can't do x-rays, we can't do CT scans, we can't do MRIs, we may never get to the cause of your pain. And so you got to trust these professionals with your money, and knowing how you're spending, where your savings, what's under the mattress, where do you keep? My mother used to keep money in her bra. There wasn't nobody going in there to get that, right? But so you have to. There can't be an accurate diagnosis without detailed information, and we're going to have to. So thank you all for bringing this information and confidence that we have people we can go to and trust. I want to go to a question in with our audience, because we're here for you all. Gerald has a question, and his question is, are there resources to get relief from a second mortgage?
Mm-hmm. Yes, I guess I'll take a crack at it first. Yeah, so when you fall behind on whether it's your first mortgage or a second mortgage, you can modify either one if you have a hardship. So the same rules apply if you have a second mortgage as well as your first mortgage, right? So the options are available. One of the best things you can do is engage not only a housing counseling organization, but your lender as well too, to start to ask the questions around what options are available. Now, depending on what type of loan you have, there may be a deeper conversation. But to answer that initial question, yes, you are able to get assistance if you do fall behind on your second mortgage.
Awesome. Anybody that good, or anyone to add to that?
That's perfect. I agree with that.
I just want to share, get the help early. One thing that's been a recurring theme is you want to engage early. Early is always better because it affords you more options, more choices, and more time to respond to your unique situation. So rather than wait, rather than say, procrastinate or whatever it is, engage early.
Great. I want to shout out Kalila Denny, who asked that question about how to get support for the work she's doing. She's doing amazing work in the community with youth and young adults. So thank you, Kalila, for your presence and your question. If I may, there's a topic that James Wood raised that I think we should talk about. James, is just 2 words: retirement plan. Thoughts on retirement plan? I know that's broad, but
I got a couple things.
Okay.
This is something I'm passionate about. You got to plan for retirement. You got to start early versus later, because the earlier you start, the less you have to set aside on a periodic basis. The later you start, the more you're going to have to save, and the more difficult it becomes. Now, in our community, we always want our children to do better than we did, and we make that real by saying, you know what, I don't want my children to have any debt when they go to college. Here's the thing. Yeah, college debt is serious, but you can finance a college education. You cannot finance your retirement. So it also helps with a child to have some skin in the game. It's one thing when they're on mom and dad's dime. It's another thing when like, yeah, I had to work all summer and I had to come up with a couple G. I think I'm gonna hit them books a little bit harder. I'm gonna get to the party, but I'm gonna get a little later. I might miss that party because I know why I'm here. I got skin in the game. And the other thing is, the earlier you start, research, study, learn. A lot of times we want it easy. When you work for it, and if it doesn't come that easy, you respect it more. You value it more. So don't be afraid to, put some sweat on your brow, researching and understanding what your options are. And if you don't understand what the investment option is, stay away from it. You want to make sure you get involved in what you know. And if you get into stock markets or mutual funds, buy those brands, those companies that you support, because you know them and they must be viable. All right, I'm gonna stop and let the other brothers jump in.
All right. Anybody else? That's a hard act to follow. Anybody else?
Pastor Bat, I would say this. I think there's a theme here, a resounding theme. Don't wait to act. Do not wait to act. I think we said that a few times, and I think I'm going to say it again before our panel's over today. Do not wait to act. Information is out there. Go to reliable sources to understand whether it's planning for a retirement, making sure that you understand how to manage your mortgage. Make sure that you have trusted advisors that can help you through the process. But do not wait until it's too late to try to figure out what you're going to do to make your next step more beneficial to you and your family.
Awesome. Let's go. Mike, any additional?
Yeah, I would agree with that as well, because a lot of times consumers are more so concerned about the current rather than the future. And the thing is that you have to start early. There's a lot of statistics out there. There's a lot of free information out there that talks about retirement planning, estate planning as well. A lot of free resources. And all you got to do in many cases is do a Google search. And if that doesn't find you the results as well, there are nonprofits out there as well that can help with a detailed plan for you as well. You always want to save for your retirement because credit card debt or smaller debts and so forth. For many consumers, it's going to be there, but you want to make sure that you're putting something to the side for the rainy day for the future.
Awesome. Rulon, I want to come to you. You may have addressed this, but even if you have, once again, when a mortgage holder goes and they step up, they do what you say. Let's go reach out to the lender, reach out to your landlord. What are some of the solutions that you can expect might happen when you realize, I'm at risk of missing one or more of my mortgage payments? What can our audience expect to be some of the solutions they might be introduced to?
That's a really good question. I called it. I'm going to say it again: early and often. So the first step is having options, right? And what I mean by that is, as the mortgage continues to get behind, the more options begin to shrink. So once a hardship occurs, don't wait until the mortgage becomes late before you engage with your mortgage provider. So, for example, if someone is 2 payments behind on their mortgage, the mortgage company may be able to, put a family on what's called a repayment plan, meaning, that family would be paying a higher payment amount for a short period of time in order to catch back up. And that happens a lot when a homeowner owns a small business or they get paid with pretty unique sources of income where they may have ebb and flows throughout the year. So I think of a small business as a good example, right? Sometimes the business gets slow during the holiday season, but things pick up in a few months. And that's a short-term hardship. And you don't need to make drastic changes to your mortgage if it isn't a long-term hardship. And so a repayment plan is a viable option if you do have a short-term hardship. If the hardship is still short-term, but it's more drastic and you're not able to make larger payments, the option is forbearance. I believe Mike brought this up a little earlier, but a forbearance is something that many families took advantage of during the pandemic. Forbearance is essentially a temporary pause on the mortgage payments for an extended period of time. But keep in mind, the payments don't just go away. They're postponed until the hardship is resolved. So in many instances, those payments that are suspended can be either paid in full. And I don't know about you, but I don't have a ton of money that I can just pay, right? So many times those payments can be put to the end of the loan and maybe due once the mortgage is paid in full, or if you sell your home, or if you refinance. But in many times, there's an opportunity to modify that loan to get rid of that balance that's left over behind. If the hardship happens to be long-term, and long-term meaning the circumstances that have changed your ability to pay your mortgage payment from that point moving forward. So that could be a loss of income, that could be divorce, that could be a health-related hardship, just about anything that impacts your ability to pay. When there's a long-term hardship, the mortgage modification is the best option. Essentially, the mortgage modification is when the mortgage company adjusts the terms of the mortgage in order to fit the homeowner's current income. So your mortgage company will adjust the terms of your mortgage to help you find a payment that you can actually maintain from that point going forward. And the way they do that is they lower your interest rate. They take whatever's past due and they put it to the end of the loan. They may forgive that amount, but all in all, it's engaging with your mortgage company, seeing what options are available. And so the first answer that I provided to your first question, Pastor Battle, is what's your hardship, right? Identifying your hardship is critical, but those are just a few options that some homeowners can take advantage of when they reach out to their mortgage company.
Sounds good. Mike, would you like to add anything to that?
Well, I agree with all those options. And the thing is that if you reach out to your mortgage lender directly, they should be able to help you. But if you're hesitant to reach out to them because you're not sure what the best solution is going to be, or you just need help, maybe you're scared, contacting a credit counseling organization like In Charge Debt Solutions is a very viable solution, because before you contact your lender, they'll be able to do that analysis and deep dive with you, and then talk about the different programs that may be available based on your type of loan. Right. Is it FHA? Is it a veteran loan? All these different type of loans, they come with different programs that are available in order to either help you stay current or bring the loan back current. So you'll be able to have a conversation one-on-one, someone who's devoted into finding not only a solution for your mortgage, but credit cards, and many other debts that you may have as well. So they'll be able to address your situation holistically, right? So then when you contact your mortgage lender, now you have that knowledge. Now you know what options are available to you, and then you can talk to them to that. And then again, if you've reached out to a HUD credit counseling organization like In Charge, we'll actually reach out to your lender with you and work with your lender with you in order to help you take advantage of these programs, help you collect your documents that you need that are going to be required in order to maybe get that loan modification. We're going to work with you so you're not by yourself. So those are many of the different services that a credit counseling, a nonprofit organization like InCharge.org and NFCC member agencies as well can provide to a consumer.
Awesome. This is great information. Back to you, Rulon. How do mortgage lenders view people who are proactive like this, who reach out regarding? I know we kind of touched on that earlier, but just as a mortgage holder, how should I understand their lens and how they see me as I reach out? What is their view from your perspective?
That's a great question. And Mike, I loved your answer. Just now, operating with confidence is key to any family that's trying to make sure that they can salvage what they work so hard for. And I think when you work with a housing counseling agency, it gives you that confidence to know that there is a third party that is there for me, that is going to help me through this situation. So, I can start with my first interaction with the housing counseling agency. I'm thinking back now, right? I believe it was my first experience with housing counseling was back in 2010. And it was during the housing crisis. So at the time, I worked in a small Wells Fargo mortgage office in a strip mall, right? So, during the housing crisis, many banks created these, one-off locations where families could come and meet and sit down with their bank representative face-to-face to discuss the trouble that they were having with their mortgage. Wells Fargo, we called ours our home preservation stores. And so I was in a home preservation store, and one day a family came in. This family had came in a few times before, and they just had trouble managing their documents. It just was difficult to help them, right? We wanted to help them, but it was just extremely difficult. But this day, this family came in with a woman, and the woman had 4 legal binders full of documents, right? So we weren't sure what was going on, right? So when the family sat down, the woman advised that she would be speaking on behalf of the family. And I'm like, okay, all right, maybe it's an attorney. Like, what's going on here? Little did I know that this woman was single-handedly saving this family's home. So keep in mind, during that time, there were many families, as we mentioned earlier, around scamming, that were being scammed by attorneys who promised that if the family paid a fee, that they can help them save their home. So I assumed this woman who came into my office that day was someone predatory until I saw how she engaged with the family and how her follow-up just increased day by day. Her due diligence was amazing after the meetings. So from that day forward, I was sold on the benefits of housing counseling. Housing counselors, they have to be all things to a family. And Mike, you know this, Hermond as well too, right? Sometimes you got to be a financial coach. Sometimes you have to be a marriage counselor, right? Sometimes you have to be just a passionate person that's working on behalf of a family. So many banks, including Wells Fargo, we understand the importance of housing counseling. There's so many things that an organization like NFCC and InCharge can do that mortgage companies cannot do. I believe housing counseling is necessary. And each Wells Fargo year that goes by, we continue to support those organizations for the work being done. And so our foundation understands the benefits of it too. And so as we engage with a homeowner who's gotten that support through a housing counseling organization, we understand that they're ready and they're committed. And that confidence that Mike spoke about, right? We see it during those phone calls, right? The documents are on time, they're ready to go. So for a mortgage company, we really admire the work being done in the housing counseling space, but we are understanding that it's easier to engage with families as they're working with a trusted third party. So we admire the profession and we continue to support it day in, day out.
Sounds great. I want to acknowledge the question from the Family Foundations of Northeast Florida. The panel's thoughts on IUL. Thank you, BJ, for your question. That might be something we could discuss at a future pathway forward. It is not something, unless somebody wants to take a stab at it or can recommend where people can go to get more information on that. Who handles these kinds of investment products that BJ is mentioning?
Yeah, I'll say that I think it's a type of retirement investment vehicle that might be connected to insurance, and I think a licensed investment advisor is the subject matter expert on that, and I think it's something that if there's interest in it, we should definitely, when we have an investment segment on paving the way forward, that we should bring that up in that panel.
Yeah. And BJ, I want to thank you for being proactive in that sense. Right now, we're talking defense, right? We're talking about trying to save our mortgages and hold on to our homes. But as you look at strategic ways of playing offense, that could be, hint, hint, Michelle Vessels and company, a topic for a future discussion that we could, because we want to play. You got to score too, right? You can't just stop hemorrhaging. We guys also be healthy and vibrant. But just wanted to acknowledge BJ's question in the chat. And anybody else have any recommendations on where he can go about that? Are we good?
I would say to contact an insurance agent. That's definitely an insurance vehicle. For those who may not know, that's Index Universal Life. So it's a form of life insurance that people can use as an investment. And that's definitely a topic as far as the investment segment as well, because it could be used for a vehicle for that. At the same time, though, if you're at risk of losing your home, that's definitely a place where you would want to put your money into before you put it into one of those other vehicles, because having a life insurance policy that you can take advantage of years from now is not going to put a roof over your head now. So if you work with a credit counselor, or if you work with a retirement specialist, or someone else that's talking about retirement, talk about what your goals are and what it is that you're trying to achieve, and also the problems that you're having, because you may want to save for retirement, but if you don't let them know that you're about to be evicted, then they might have you put your money in the wrong place as well. So it's about creating a plan to say, okay, well, first I want to have make sure my roof over my head is secure. I want to make sure I have an emergency fund just in case my car breaks down, I can get my car fixed. And then the next thing that I want to do is now and start investing in my retirement. But it doesn't make sense to invest in retirement if you don't have an emergency fund, and then your car breaks down, and then you don't have a job, and now you're at risk of being on the street. So it's one of those things where you just got to sit down and prioritize all the different things that you would like to do that's important, but they all have a priority level. Like, buying food for yourself comes before, many other things. That makes sense.
Oh, it makes perfect sense. And I think the spectrum of people that we're serving has people on all ends of that spectrum. That's why we have this level of diversity, where we can have this. But that's brilliant, as you broke it down just now. I know we're coming up on the close of our time, and I want to go to Hermond right here, and just tell, somebody's struggling, they're facing foreclosure, they're in financial trouble as it relates to being able to keep up with their debt and their mortgage. Why should they be comfortable coming to one of your service agencies, one of your certified counselors? Why should they be comfortable?
Sure. Great question. First and foremost, our member network is made up of agencies that are HUD certified. All NFCC housing counseling agencies are HUD approved. Their counselors are especially trained and certified by the government to help clients assess their financial situation. They work with the client to evaluate potential options if they're having trouble paying their mortgage loan or rent. NFCC certified counselors work to create a personalized action plan that is specifically tailored to address that client's unique needs to successfully enable them to meet their financial obligations in a responsible way. In addition to the HUD certification, we at the NFCC have our own operating standards that go above and beyond what HUD requires. Before any agency can earn the right to display our seal, every nonprofit NFCC member agency is held to 18 quality standards to ensure excellence. Member agencies have to be accredited. They have to pass an annual review of the agency's financial health and undergo periodic assessments of counseling performance and programmatic integrity. The NFCC certifies both the agency and the counselors, and we hope this ensures that we remain a trusted source of nonprofit credit counseling and financial guidance. In addition to all that, we're a nonprofit. So that means that our agencies focus on and exist purely for the benefit of our clients. Our funding comes primarily from grants from foundations and grantors and member dues. There may be some nominal fees involved to cover the cost of delivery of services, which may not be covered by grant funding. An example of that would be to pull credit reports or enroll in an optional debt management program, but nothing that's really outrageous. Plus, our agencies will waive fees based on financial hardship. So there's really no risk here. We're certified by the government and we have our own operating standards. In addition to everything you've heard at the beginning of this program.
I love it, man. I'm sold. I am. I appreciate it.
Sure.
So where we obviously have people listening from and tuned in from everywhere. Where can people access some of your agencies?
Okay.
Agencies.
First, I want to say we serve everybody. Lottie-dottie, everybody. Our NFCC member agencies have a presence that is coast to coast. We're nationwide. So our member agencies serve all 50 states, Washington, D.C., and Puerto Rico.
Wow. Southeast?
Southeast. With the mambo sauce.
I'm sorry, if you're DMV area, D.C., Maryland, Virginia, that's a local thing. So my fault on that. How can they get in touch with the NFCC? How can they get connected for help?
Sure. So if you or someone you know is interested in receiving confidential, non-judgmental counseling, you can call or contact the National Foundation for Credit Counseling, NFCC for short. I'm going to give you a number. Here we go. 833-388-2227. Give it to you again. It's 833-388-2227. If you want to use a link, it's www.nfcc.org/home-sweet-home. And it's what's been on the crawl here that you can see at the bottom of the screen, nfcc.org/home-sweet-home. We're waiting on you. We're here to help.
I love it. Gentlemen, we got a few seconds. Any final thoughts for our audience today? Anything that you want to share? Go ahead, Mike.
I just got one final thought as well. And again, consumers that are calling to us, we find that they may be struggling with their mortgage or their rent a lot of times because there's other types of debt, like credit cards. So In Charge Debt Solutions, we're able to help many consumers with a debt management program as well in order to lower their payments on their credit cards so we can help them get that paid off. So then it can free up cash flow so they can then pay on their mortgage or their rent as well. So again, just want to emphasize, contacting a credit counseling organization like In Charge, we take a holistic approach at your situation. So we can help you with your mortgage, we can help you with your rent, but we're going to look at your other debts as well, if that's a problem area, and recommend a solution for that as well. And so, in my opinion, you can't go wrong if you're not sure exactly what to do, reaching out to an organization, nonprofit organization, NFCC certified organization as well, in order to get your questions answered.
Thank you for that. Again, that's In Charge. Rulon, you have the final word.
Well, Pastor Battle, thank you for moderating this session. As always, it's been amazing. I can listen to Hermond all day. So
Me too.
it's always a privilege. One last bit of information I want to share on top of what Wells Fargo does. There's also federal programs out there. I'll name one, the Homeowner Assistance Fund. It's $9 billion that came by the way of the American Rescue Plan in the summer of 2021. Those funds are available in every state across the country. Funds don't run out until September of 2025. So if you are interested in finding out more about local programs that your state may offer, you can Google Homeowner Assistance Fund, and it will drive you to your state administrator's page as well, too. Wells Fargo supports that program, but there's tons of assistance out there. So not only can you call In Charge, NFCC, you can get a hold of your mortgage provider, such as Wells Fargo and others, but also Homeowner Assistance Fund is another option to support families that may be running into trouble paying their mortgage.
Gentlemen, I can't thank you enough for your time, your service, your leadership in our community. Thanks again to Urban One, Wells Fargo for making this all possible. I hope this was a blessing to you all, and I hope you take action. Because if you don't do anything, nothing will change. God bless you. See you again next time.